First thing first, I'm gonna talk about special journal. Special journals are specialized list of financial transaction records which accountants call journal entries. Each special journal record transaction of a specific type such as sales or purchases. Hi, my name is Muhammad Hazim bin Muhammad Faisal. My matrix number is 01DKB23F1023. I'm here to talk about purchase journal. Here are the example of purchase journal. A purchase journal is a special journal used to record any merchandise purchased on account. The entries in this journal are made based on the invoice received from the supplier on the purchase date. Function of purchase journal. Purchase journal are special journal used by an organization to keep track of all the credit purchases. Next is benefits of purchase journal. Purchase journals will give you the information how much you are spending on purchase of merchandise inventory. All entries of purchases of goods on credit are recorded in one place. And lastly, I will talk about the features of purchase journal. Purchase journals includes details such as: first, the date of the transaction; second, the name of the supplier or vendor; number 3, description of the items purchased, the quantity, unit price and the total cost. Lastly, it records the payment method used, whether it cash, credit or other form of payment.
Assalamualaikum. My name is Nurnaza binti Muhammad Fazil. Matric number F1024. A sales journal entry record a cash or credit sale to a customer. It does more than record the total money a business received from the transaction. Sales journal entry should also reflect changes to account such as cost of goods sold, inventory, and sales tax payable account tax. Next is the function of sales journal. The function of sales journal is make it easier to record credit sales in one place and track them. This helps to reduce the risk of errors as all sales information is stored in one place. Next is benefits of sales journal. The benefits of sales journal entry are that it allows you to keep track on your sales and expenses. You can see how much money is coming into the company, so you know where and where not to spend it. Using sales journal entry will help you make informed decisions about whether or not the business is doing well enough to continue as a going concern. If your sales are up but no one is buying, then it may be to consider changing your product line or even restructuring how you are doing things. The next features of sales journal. Firstly, you need to have date, account debit, invoice number, post reference entries, account receivable and sales, and lastly, cost of goods sold and inventory.
Hi, my name is Muhammad Iman Ikram bin Harun. My matrix number is 01DKB23F1034. What is written inward and knitted outward? Knitted inward and knitted outward are accounting terms that refer to the return of goods or merchandise by a customer to the seller and the return of goods by a business to its supplier, respectively. Function of written inward. Number 1. Written inward helps a business track merchandise that is returned by a customer for various reasons, such as defective, damaged or incorrect item. Number 2, this allows the business to adjust its inventory levels and accounts receivable for returned merchandise. And number 3, return invoice help in maintaining accurate records of sales return and analyzing the reason behind customer dissatisfaction. Function of return outward. Return outward helps a business to record merchandise returned to a supplier or vendors due to various reasons like defect, damage, overstock, or incorrect shipments. It allows the business to adjust its inventory levels and payables for return merchandise. What is the benefit of return inward? The return inward will reduce first account transaction and expense administration in nature. In simple word, return inward will be a receipt sent by the seller for the product sold by the buyer. And for return upward, it helps in maintaining accurate financial record by reducing the amount payable to supplier when goods are returned. How to prepare a return inward? First, the sales return allowance account is debit. Second, account payable is credit. Then, an adjusting journal entry can be made to show that payments has been received. How to prepare a return upward? First, need to identify the merchandise that was returned. Second, you will need to record the credit that was given to you by the vendor or supplier. Finally, you will need to subtract the cost of the returned merchandise from your total sales for the period. This is an example for return inward and return upward.
My name is Luqman Rakim bin Rahimi and my matrix number is 01DKB23F0128 and I'm going to talk about cash journal. Cash journal divided into two parts. First, we have cash receipt journal and then we have cash payment journal. First thing first, let's take a look at both cash journal function. A cash receipt journal records all transactions that increase cash for a firm. For the cash receipt journal, cash transactions include only those made with currency and coins. For the cash payment journal, the cash payment journal tracks all credit transactions to cash, meaning all cash payment made by the firm that decrease the balance in the cash account. And then we have the benefits of cash receipt journal and the cash payment journal. For the cash receipt journal, the cash receipt serves as a critical record keeping tool for a business. They also provide evidence of sales and help to track revenue, which is important for preparing financial statements and tax returns. Lastly, the cash receipt can also help to solve disputes between a buyer and a seller by providing a clear record or a source document. For the cash payment journal, it helps you keep track of your expenses. And then each pass, banknotes and coins settle a payment instantly. And the last one, it also secure. Cash has proven to be secure in terms of cybercrime, fraud and counterfeiting. We move to the features of the cash journal. For the cash receipt journal, it contains the date of the transactions, the amount of the transactions, description of the product or services, and then we have the total quantity sold, the payer's name or company name, the payer's signatures, and the last one, an identification number. For the cash payment journal, we have account debited, account payable, cash, date, discount on inventory purchases, draft or check number, pay information, and the last but not least, we have the reference number. For the last part of the cash journal, we have the example of the cash receipt journal and the cash payment journal.
What is general journal? The general journal, often referred to simply as a journal, is a financial accounting tool used to record financial transactions in chronological order. It serves as a primary book of original entry in double entry accounting systems. Its function in general journal: determination of opening and closing entries of accounts, especially when there is a missing item of the balance sheet. Second, posting of transactions to the respective ledger account. Number 3, cash or credit purchases and or all sales of non-current assets on credit. 4, end of year adjustment. 5, correction of errors. What is benefit of a general journal? Shows all information about a transaction as it takes place and also provides an explanation of the transaction. How to prepare general journal? First, identify transaction. Second, analyze transaction to see how they change the accounting equation. Number 3, generalize transactions by recording them in the general journal. Number 4, include a reference number or journal entry number which is unique for every transaction. Number 5, include the date of the journal entry. Number 6, include the account column where you put the names of the account that have changed. Number 7, include 2 separate columns for debit and credit where you will put the amounts that will be credited and debited. Number 8, include the journal entry explanation. These are the example of general journal.